Hello, hello, mic check 1 2. Hello. Okay, I know you can hear me. That's excuse me. That's phenomenal. So this live stream is going to be a follow-up from where we left off yesterday. I would like to draw attention to this trade here. I would also like to bring your attention to this 1 minute suspension block that was formed on a different liquidity provider. So this 1 minute suspension block was formed right in there. See, it says 1M suspension block. This was formed in the previous live stream. Now, just because we're at the start of this live stream, and it's going to be a very easy place to reference and include key details because you're not going to have to skip through the whole live stream to go and find something, right? So, what I'm going to do is I'm just going to prove it really quickly. So, obviously, we are currently on this live stream here. I'm going to start up the previous live stream quickly, um, and I'm going to show you what the trade looked like. So I just need to quickly make sure, right? So this is the end, and this is the beginning. So if you go back onto this live stream here, it's the BTC follow-up from last stream video, and it's 6 hours, 45 minutes, and 25 seconds long. This is my original analysis for this target here, right? So I can go back and I can prove that I did all of this analysis and I placed this trade on the live stream. Right. Well, actually, it was the live stream before this. But we're talking about like that's this, right? But we are talking about this entry here, this one here. So this entry is this movement, which is also this movement here, right? And I went into a lot of detail about specifics on the last live stream, but what I want to show you is this. So I'm going to put the audio on so you can hear what I'm saying in this live stream. Any of this, I wasn't like, I was supposed to stop losses covering that, but that's the risk that I was in. That's how far I afforded the price to be able to go. So I'm basically pointing out the reason why I took this trade and the significance that this trade had to me. But then further into this live stream, I placed this trade here and I essentially target this red zone. And look, this red box was put there from the entry from when the entry was placed on this trade. Look, I'll rewind and I'll just prove that, right? Look, the red box was there when this entry was placed. And you can hear what I just said there. I need to see price come into here. I need to because of what I've mentioned previously. Because of what I mentioned previously. So you'll have to go back into this live stream and you'll have to watch it if you want like more of an understanding as to why I picked that as my target, right? But what I'm showing you is this entry. Excuse me. Where is it? See, that's the issue because the live stream is so long. It's hard to really find exact parts of what I'm looking for. But it was basically this trade here, this one. Ah, so that's gone into profit massively already. So the box that I pointed
all of
out,
this was
big gold necklace, just kind of speak. But I'm essentially explaining what I'm doing while I'm doing it, right? So this trade, or maybe it was
this
off,
can
being traded to. So I go through like why I think what I think
from it, and it's
in
just
this
mad. Like
commentary.
have like this man.
So, but this red box you saw before, that was pointed out from way at the beginning. I also mentioned that price is likely going to trade in this first presented fair value gap of 9:31 a.m. after 9:31 a.m. on Wednesday, which is this orange box right here. And as you can see, after we leave price for a while, we end up coming into here. See, look at the reaction on this level as well. And this red box was predefined when price was way up there. I spotted that and I knew price would come into here because there was a discrepancy between two different liquidity providers. So you can see the reactions of this area, and this area was predefined when price was way up there. So I knew it was going to come down into here. And you can see as we keep going a little bit further, price continued to react off my level. And then we traded back up into it. And then that's where I ended the live stream because my target had been hit. This red box was my target because I'll go back and show you because that red box here has always been on the chart. So that was always there. See, look, that's me drawing it. I drew it at 7 p.m., right? So I drew it here so I drew it at 2 hours into the live stream, right? And then we can go all the way over to 4 hours into the live stream. Oh, sorry, no, we'll go to 5 hours in. So that trade would have been running for about 3 hours. Look, see, 3 hours later, we're now in that zone that I knew was gonna come, right? So if you want to see why I was drawing this analysis and everything here, you'll have to go back in and you'll have to look through the live streams that I did in the past. Because the last four live streams that I did have all been around this movement here. They're all like they all have a Bitcoin picture and they're all basically the same thing. Right, but what I wanted to show you was at 2 hours in, that's exactly when I was drawing this red box here, and then 3 hours later, the red box was captured by price. Right, so I just wanted to stress that point, okay? So that was this box right here. This. I'll put it back to where it was. So I knew up here that we'd be coming down to here, and then obviously we had this retracement from my area. So we came to my area, right? And then the significance of this 1 minute premium wick was outlined by this delivery here. And then we take out this buy side, this, all the way up into this suspension block here, which was on the live stream that I've just showed you before. So you can see that this suspension block was drawn on this chart here. This was one of my original entries, but the entry of the red box thing that I was showing you was actually more like this into here, basically, like into this area here. That's where that red box was drawn, right? Roughly about there. So notice what price has done since then. So we traded into my predefined area, we rejected it. We took out some buy side, And then we stopped. The price stopped dead in its tracks, right at my level that was existent before. Like, so it's not like I waited until price came into here and then I drew the box, right? This box has been on here since the very first minute that it formed, since 5 minutes after it formed. So like 11:35. So I've had this green box on my chart since 11:35 on the previous day. And it was respected again here on the next day, which is incredible. This is showing you algorithmic delivery. Look at this macro up here, 3:15 p.m. to 3:45 p.m. macro, exactly at the pivot. Grade it. Look at the reactions, right? What else? What else? The first presented fair value gap on Wednesday. Look at how beautifully it was tagged here, and then we failed to reach the bottom of it and traded higher. Fucking incredible. Absolutely fucking incredible. Honestly, mate. I wish I knew this before I found it out. I would have saved myself a lot of losses. A lot of losses. So yeah, I just wanted to like take a brief amount of time to quickly like do like a recap of what we were covering. Obviously this video's only been 11 minutes here. I've already proved this area to you. I haven't proved the analysis. That's something you'll have to trust me on and just go back through my live streams and see for yourself. Every time you can see a box placed on here, right? So every new box that's being placed on this chart, every single drawing on this chart, I spoke about in a live stream in one of the past four live streams. And if you quickly skim through the live stream, that you click on the different time intervals at the bottom right, you'll be able to see when the box was first drawn. And as I draw it, then I speak about what is my thought process as to behind drawing it in the first place. Right? So it's impressive that my levels are predefined, but what's more impressive is that I was explaining them as I was noticing them. And I caught that all on live stream. So everything I said is on live stream. You can go back and you can reference everything that I've said as I've been drawing it. I've been calling out areas like this box here and this zone here. I called them out before it happened. My stop loss never moved from there. So, so to be honest, to be honest, um, yeah, I'm pretty happy about it, and I just wanted to make like a bit of a like a little bit of a recap as to what's gone on, what's happened since ending the stream last night. So ending the last stream to this one. But all of my areas are are noticeably important through time. So like this overlapping fair value gaps area here, that we traded into it, that one wick there, traded right into it, tagged it, and then traded higher. Like that's what I love to see. That I love to see it. I don't know if it's like I don't know what it's called. I think it's called institutional sponsorship, but I'm not 100% sure that is the exact definition. It sounds like it would be. So um we're having we're having price visibly, evidently respect areas that are, I don't know, maybe identifiable by institutional sponsorship. That's not exactly what that means. I think I'm watching a video about it right now, actually. I am, I am. Look, institutional sponsorship. So I'm still learning myself, you know. I'm still learning myself. But I just really wanted to take like maybe 15 minutes out of this whole, maybe this live stream's probably going to go on for like 2 hours or so. Maybe 2 hours. I'll try to keep it short so it's actually like fucking watchable because I'm aware that those 6 hour ones are not watchable. But a lot of those 6 hour live streams, like for the most part, like okay, yes, there's like 2.5 hours, maybe 3 hours of me speaking, but what is important about them is the trade executions and how you can literally just kind of like skip through and see what happened with my trade. Like, so you don't have to watch every fucking minute be printed. Like, you can skip through to halfway, skip through to the ending, skip through to like this live stream, and then see the after effects. So there's no point in having a 22-hour live stream if I can cut the live stream here where I did, and then re-record it here. I don't need to have all of this in here. Although to be honest, a short from there to there would be beautiful, and a long from here to here would also be quite nice. But that's whatever. That's whatever. So today I'm gonna be smoking and just basically like taking my time to go through the charts, identify what I can see today, see if there are any primitive targets that I can find for objectives, and just go with the flow basically. I've already made my 3% today, so for the next 5 hours and 10 minutes, I don't need to be taking any trade. So to be honest, there's a likely chance that I won't take a trade, and if I do, I probably won't outline it on here. But then again, I don't have an audience. I don't have an audience, so it matters not whether or not I fucking put the trade on here. So I'll probably be honest with you, and I'll show you what I actually believe, and I'll show you my actual real entry. Um, yeah, but I just wanted to take some small amount of time to uh, sort of give like a generic understanding of why these drawings exist, how to understand what they are. So basically, why they exist is because this is my analysis. How to understand what they are, go back into my previous live streams, look for when I'm drawing the drawing and I'm speaking about it at the time. That's all I can say. Am I fuck going through all of this again? But just one thing, right? So you can see this these red lines, this like grid of red lines. These are the quadrants of this 1 minute candlestick. So the exact tip of this 1 minute candlestick, right? You can see that right here. Yeah. So I'll go back into the 15-minute chart. And then you can see price comes down from where we make a high, and then it perfectly stops exactly at this black line, which is the fair value overlapping FPG's area on this chart. But see how we came in and we tapped this red lines, right? We tapped into it right there. Well, and the reason it stood out to me is because on this liquidity provider, we didn't tap the red line. So this is the same. This is the same 1 minute candle wick. You can see here, the exact place, it didn't tap these lines, sorry. Why? Why did it not do that? Well, I don't know. So that's why this area was my target, because it's the difference between the area that didn't hit this top wick and the top wick itself. So that was my target, and I explained why that was my target at the time. So if you go back on my live stream, you can see that I reference it numerous times and I speak about it quite a lot over the 2 hours because I had nothing else really to talk about. So I knew that that was my predefined area. Look at how Price respected it so beautifully. Amazing. Absolutely fucking phenomenal. Um, yeah. So anyway, I'm gonna I'm gonna just leave Price here for a little bit. Um, I'm gonna put this sign on. I am not this. I am not speaking right now. So the reason that I'm putting this sign on is because I'm gonna go on mute for a second. I'm gonna let Price do its thing. I'm gonna put some music on for you guys so you don't get bored of watching the video. And then I'm gonna roll this smoke, and then as I smoke, I'm gonna go through the chart, and I'm gonna outline some more areas that are of importance from today's movements, right? But I just want to bring your attention before I do that really quickly to how shit. Right, just keep your eye on it. Keep your eye on it. This orange bar. See this orange bar? London kill zone first presented fair value gap of Wednesday. Notice that red wick right there. Keep your eye on this bar. Look, I'm gonna notice how that red line, this one here, perfectly touches this orange bar, the first presented fair value gap. And then what happens after that? Displacement to the upside, small retracement. We sweep all of this buy side liquidity out with a breakaway gap. Or maybe this is the breakaway gap, considering it's above these highs. Right, whatever. Or maybe this is the breakaway gap, considering it's above this high. But whatever. So what I'm trying to show you is the retracement back into the London kill zone first percent fair value gap, right? And then fast forward through time, look, the equities open of the same Wednesday, that was respected in a similar way. So we created it, right? And then we traded away from it. We came back into my predefined area that I explained just before. And then we came back into this 1 minute suspension block that's been on the chart the whole time it existed. Like I literally after five, it was presented 5 candlesticks later, 5 1 minute candlesticks later, I drew the line and extended it forward, and I've been using it for entries ever since. So basically, I want to outline this. This wick perfectly taps this orange bar, and these candlesticks don't close or even wick beneath it at all. And then we trade higher, displacement. So that is also equally incredible. And this is the algorithm doing its job, you know. This is what makes my job easy. Look at how fucking clean that is. I'll show you again. Your eyes are down here on this wick into this orange bar. That is so beautiful. And then you have the New York Open kill zone. We utilize the 6:30 a.m. 1 minute candlestick price. And then we come into here. Oh my God, what is that? Is that what I think it is? I think that's what I think it is. One sec. What is that black line? I think, okay, so this black line here, this is the first presented fair value gap. So that is the original first presented fair value gap. So that is the FPF, oh shit, FPFVG of the equities open, which is from 9:30 in the morning New York time to 10:30 in the morning New York time. And look, we respected the entirety of the area with this wick, right? And then this gives even like this gives even more clarity to what we're looking at. So look, as I now extend this line here, look, we tap it. We actually tap it. That tiny, tiny little inefficiency, man. This first presented fair value gap of the equities open. So this is our like break of structure, displacement, fair value gap, right? So this one. But this is our first presented fair value gap. So if they coexist with inside of each other, then you can just basically draw the biggest one or the most relevant one, and then leave the other one in there as well. So as you can see, we've come down, tagged the Wednesday for like the actual one, and then we tagged the original one down here, which is fucking incredible. What you're telling me that you can point out these areas and be that fucking accurate to the tick? I don't think so. Sorry, I don't want to sound cocky. By the way, this is not my strategy. Like, this is the strategy I use, but I didn't come up with this. I didn't invent this. This is not mine. I did not invent this. But anyway, I'm gonna go to rolling my smoke now. But I just wanted to clear that up a second. The importance of the the session kill zones and the session ranges. And like I've spoken about it before as I was drawing them on, but I just wanted to clear that up before I go into silence right now. So I'm gonna put some music on for you, and I'm gonna chill out for a bit, and then I'll come back to the price soon, and I'll tell you what's been going on, or I'll tell you how I interpret what's been going on anyway. Okay? Right, I'm gonna put some music on now for you, and then I'm gonna roll this smoke, okay? So I'm gonna put the music on now. Give me a sec. YouTube, YouTube, and do you want to see? So I mean, can we use this? Is this allowed? I don't want to be using music that's copyrighted. Is this copyrighted?
And how's your morning going? Oh, I don't know. I just burned breakfast again. I upset both of the kids. I blew out I don't know how many pieces of the house, and I walked out on a meeting with a really important client. Sorry I asked.
Can you hear that? I hope it's not too loud. Anyways, I'm gonna mute myself, so it doesn't really matter how loud this music is. But when the music stops, then I'll come back and I'll start speaking, okay? So I'm gonna put the music a little bit loud so you can hear it, and then I'll turn it off soon and I'll start talking, okay? Fantastic. 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 Anyway.
knock out the bomb like.
You eat this, you taste this. Mmm. Naked, just fruit and nuts.
Okay, hello. I'm back now. I'm just gonna adjust the music because I don't want it to be too quiet, but obviously I don't want it to be too loud. I don't want the music to be overpowering my voice in any sense, but at the same time, I don't want you to only be listening to my voice because then it might get a bit jarring for you. You might get a bit bored, right? So today, in a couple of hours' time, I want to be looking for the macro, so the 315 to the 345 macro. I think I've left it a little bit too late today, to be honest, to do any session, any trades inside of the kill zones, apart from Asia. Oh, 1 second. So So I'm waiting for the macro. One thing that's crazy is if you actually it doesn't matter, it doesn't matter. Right, anyway. So for today, what I want my focal point to be revolving around is the sessions, same as yesterday. It's a repeatable thing, you know. Could do this all the time. Could do this every fucking day. Right. Even the weekends on Bitcoin, not futures. Just what's it called? CFDs. Is it CFDs or ETF? Right. So we need to mark out the London Open kill zone. Do you know what the time threshold is? It's a 30-minute window for the London Open kill zone without me having to go back and show you. It's 1:30 a.m. New York time and 6:30 a.m. London time. So we're going to mark out 1:30 on the chart. Excuse me. So we have 1:30 here, and we're going to extend this price, this box, for half an hour. So in fairness, it's going to be better for me to go on the 1-minute chart to be able to accurately identify what I'm looking for. Right. So we need to mark the low and the high of the London Open kill zone. That's what this is. So I'm gonna mark London kill zone. Put this at the bottom. So it's pretty obvious that that's what that is, right? The London Open kill zone. Now, when marking, oh sorry, this is drawn incorrect. It's actually there. So when marking the first presented fair value gap, it has to be after the opening minute. So you can only do 1:31 a.m. You can't do 1:30. So this fair value gap, although it does exist, you can't use that to that. It's not allowed. It's not allowed. That's not the one. The one that you want to be using is whichever fair value gap breaks structure or takes a higher or low, or it has something that stands out about it, you know, even if it's like really small. If it's a 3-candle sequence and one of those 3 candles takes the high or the low, or like breaks structure or creates displacement, that's the one you're going to use. This low got taken out in this fair value gap. Even if this low got taken out by the 3rd candle in the sequence, you would still use this fair value gap because it's formed within that 3-candle sequence. So we take this to this, and this is our zone. not the first one that I outlined, this one. What's mad about this, straight away, you can see we have a we have this acting as an inversion fair value gap later on in time. So it opens and it begins, the fair value gap forms, and we trade lower, so it's a bearish fair value gap. For now, but then when we trade higher than it, yeah, now becomes inversion fair value gap. For while we're below it here, if price tapped it and then traded lower, so if the price went down here, back up to it once, and then traded lower, then this fair value gap would be a reclaimed fair value gap because it's a bearish and then an inversion and then it becomes bearish again, so it's reclaimed. But this fair value gap actually stayed as an inversion, right? And it's easy to see that after that happened. But anyway, we can see here that we formed a balanced price range inside of an inversion fair value gap. That is quite technical to spot. You can't spot it straight away. It's more of an after the fact thing. You can spot it as it's happening. One sec. So a balanced price range, we have this fair value gap here that is rebalanced by this fair value gap here, and both of those fair value gaps overlap. I'm pretty sure ICT said something like now this might be with the wicks, kind of like a wicks kind of do the same thing, so it might be only for the wicks. I'm not sure if it's actually for the fair value gaps as well, but this is the balanced price range. Right, so this fair value gap is inside of that one. I mean, to be honest, you'd probably look for it to be a little bit more clean than that. But regardless of whether or not there's this this gap here and this gap here inside of this gap, right? This is still an inversion fair value gap, right? So this is it's an inversion fair value gap for while price is trading above it. So the characteristics can change later down the line. You just have to see what price is doing as it's like interacting with the level. So this is the London kill zone FVG of Thursday. Is it Thursday? Yeah. Thursday. And then I'll put this over to the right. Okay. And now we have this, which is the first level in our thing. We can now extend this very far into the future. So we can typically extend this for the whole of time. But to be honest, you'd be looking for at least a week. At least a week. Sometimes these can stay open endlessly. They can just remain open for 2 weeks, 3 weeks, a couple of months. These can stay open and price can just always trade away from it. But usually what you'll find is price uses it as a reference point later on in time. Look at this wick here. And it's always like as we're leaving it. Look, so we're leaving this area now. Look at that one wick right there. Can you see that? Obviously you can see that, right? So we have the 30% fair value gap of the London kill zone. That's defined here. And then look at that wick right there. Wait, hold on. You see that wick right there that taps the low. It just taps the black line. That red one right there. That's incredible. Say you went long there. Factoring in spread, you have such a tight stop on that, but because it's the 30% of fair value gap, we've already swept it. We've already rebalanced into an inefficiency. So that low would be my invalidation. If price does wick down here and then reverses up, well, that's just bad for me. But to be honest, that is a beautiful rejection of the first presented fair value gap, and that's how you could utilize that. You could even have just stopped there, because you know if the price comes below this, we're probably going to take that. But you have to realize this is all in the space of a couple of minutes, so you have to be very fast, very precise. But you could even have waited for confirmation. You know, you could have traded back. See how we left this inefficiency here, this blue one. You could have entered on that. There's a 2-to-1 right here, and your take profit was instantaneous. And that could be a limit. Like you could have put your limit at the top of the fair value gap and had your stop down here at this, because in fairness, all you're doing is protecting this level. You're hiding behind that. You know what I mean? Which is a fucking good level to take a trade from, clearly. But the thing is, sometimes price can obviously evidently use it and sort of slide people with it. Like you can kind of see here how we trade higher into this suspension block, and again, so we trade to the top of it, and then we trade to the middle of it, right? And then we come down into this first presented fair value gap of the Wednesday, if the equities open, and then back up into today's London kill zone, bang, and again, and both of those wicks stayed below that top line of it. See what I mean? It's fucking wicked. So then we see that we even can target this consequent encroachment here and taking the liquidity below that, which is mad, because look at how many entries it gives you from just these predefined areas alone. Here, use a one candlestick high from even these relative equal highs. You only want it as an invalidation. So even if you have your stop loss here, that high might get taken, so price might come up to here, but if price goes up to there, then I don't want to fucking have anything to do with it anymore. Like price comes all the way up to here, I can't say that we won't take this high out now, and then the market is just only trading high. I don't know, you have to have some form of what if scenario about your risk, because I don't know if you want to put full margin on these candlesticks. So, but you can see how the algorithm respects that so well. Actually look at that. Right here, man. You could have entered off there, and then you're basically just using one of these wicks, one of these highs on the fall as your stop loss. Any of them, really. Any of them, but even this relative equal highs. But this is a good target to be hit for when we're down here. So look, watch what I do in a second. Look, watch, say you use that as your stop, because you want to be somewhat safe, because price could actually come up here and rebalance into this fair value gap. But if we see this high get taken, then it's probably just going to keep going higher. So I don't want to see that high get taken, so that's why my stop loss is. So if this high gets taken, I know price is likely to come up here. So that's why my stop loss is tightens right there, because if it comes up here, well, I knew that already. If it goes past there, then we're gonna see it. So see what I mean? We come past the stop loss here, right? And then we go for that. Literally, I wasn't even looking over here. So we hit my stop loss, and then we hit that. So my stop loss gonna be here, because I know if it comes to there, then I'm home. So right. So basically, we can take that. And then that's obviously this is some kind of fucking mad, incredible, you have to be a professional to do this, okay? Or you have to have some fucking banging trustworthy analysis. Look at this entry here. While price is trading below this, if you saw it, even if you waited for confirmation, to be honest, the move itself is confirmation. But say that you had a limit, you wanted to enter off the premise of buying this gap here, buying this golden gap. You can have your stop loss below it, just anywhere below it, because if this gets ran, then we probably will keep going down a bit. Like, to be honest, like, I mean, it would make sense. Like, if this gets ran, this gap here, then that means the gap kind of failed, and we're probably going to take that low, or maybe we'll come like into halfway of there. So you could really have your stop loss maybe under this candlestick here, because if that gets taken, then we're probably going to take this low into that one, into that high. See? Like, we'll probably come down here into there. So your stop loss can probably be right there, or even just at the below of here. Like, say that you actually just only put your stop loss like right there, because this is the low of the equities open. So you know, any like institutional traders going long in here, that's likely to be where they're gonna have their stop loss. So you're just jumping on the you're riding the tailcoats of the professionals. So that's where my stop loss is, right? And then we're targeting these relative equal highs. See that high and that high right there. See that, this one here, and this one here. That would be my TP. So I got tagged straight away, like immediately. Like, it just, like, it happened straight away. Like, you know, all in the space of a few moments. Like, say that you targeted this high. To be honest, these highs you're good. Even this high in itself, that is where the market went. So if you targeted that high, or just maybe in that wick, anywhere in this wick, you would have had your TP hit, depending on the liquidity provider and how high they want to push it. Because I mentioned in my last live streams that it matters quite a lot, actually. Like, if you're taking your analysis on one liquidity provider like this, and it has a different algorithm, or like slightly different highs and lows to what you're trading on your phone and your broker, where you're executing your entries, then you're gonna have a fucking problem with your stop loss. Like, if your stop loss is that tight, you know. But if you're taking like a scalp based on the premise of this, I mean, to be honest, how long was this trade? Half an hour, exactly half an hour. That is very sus. Do you not think? Do you not think that's sus as fuck? This is an algorithm. This is a very strong, powerful, incredible computer, right? And this trade is 30 minutes long, precisely. The last candle of inside today's London Kill Zone first presented fair value gap on. Sorry, 1 second. Look, you can see the last candle that taps it. Half an hour later, on the 1 minute time frame, exactly precisely half an hour later, we're now at this consequent encroachment of the same gap. Oh no, sorry. Well, no, this is London Kill Zone, and this is the equities open first presented fair value gap. So they're not in the same exact session, but it's the previous day's first presented fair value. It's a reference point from the previous day that we've already pre-anticipated and outlined on the chart before the day even began. We put this bar on the chart in the first like few minutes of it forming, you know. So we try to find this straight, or we try to find it like after the London Kill Zone's finished, you know, to be on the safe side. So my cup of tea is getting cold again. So anyways, look at this. That is 30 minutes precisely. 1, 2, 3, 4, 5, 6, 7, 8. Okay, whatever. You can see here. 29 minutes, 28, 27, 26, 25. At 30 minutes precisely later, we're at this consequent encroachment. We jump from that one to that one. That is a fucking very great scalp. A fantastic scalp. So, anyway, we're using a stop loss at the low of this kill zone, so the equity is open. This hour window from 9:30 to 10:30 a.m. Eastern Standard Time. We're utilizing the gap itself for our entry. So say that it was here, but it doesn't even need to be so precise. Like say that you bought like here and the spread had to be there. You bought like there because you want to see this hiking and out the gap. Right? Your stop loss is obviously the low of this session. Or maybe like tiny bit below, just for the sake of a couple of pennies and then running the stop loss. Like there. Like that. Like they just oh no. Fucking so like if that was a stop loss, slightly go for it, then price just rejected again. But I don't know. So basically, right, you could be targeting here. You could target your stop loss on the previous trade. You could target the high here or anywhere in this wick, because that wick stands out like this on this side, that wick stands out. And then as you look over, the wick just matches it so perfectly. So, like as ICT would say if he was explaining this, it's probably random. You know, you would just confidently go, you know, that's probably random. So, and like, you know, these two entries, you're done for the day after that, really. Like, that's all you need. Look, you took 2 trades. You don't need to fuck with anything else. That's absolutely insanity. But unfortunately, they weren't real and they're just examples. So, but that did only take half an hour. So, but look at the algorithmic delivery in itself, right? Look, we have this gap to this gap. Is that not just so easy? Like, is that not just so simple? This low getting taken out, and if this gap was drawn before that low formed, and then you saw that price ticked off it, maybe you would trust this gap more. But look, you probably would. You would trust this gap more, yeah? Look what happened. We didn't even go below it, even though price did come back to it. That's confirming the gap in itself, you know? So like even just this entry right here with the stop loss at obviously the PD area, the bullish the fucking 1 minute suspension block, sorry. That's a 1-to-1 trade, and you hit that perfectly. You don't need to have proper fucking tight stop on it. Clearly, you hit a 1-to-1 on this one movement, and it only took you half an hour. It took you half an hour, and you won your trade. %1 for 1%. But like, are you really gonna want to like watch price like go all the way up to the level of here, even though that's a PD area? You would probably want to know you're wrong a little bit sooner, maybe 1.5%. So you got 1% for 1.5%. There you go, this high right here instead of that PD rate. Because you know if you take this high, we're gonna go for that. Because the relative equal highs in this area here. I think that's probably where we're going now. I didn't see it before. So you have this high in this suspension block, and so what the fuck, bro? What the fuck? Look at this. Look at this shit. Look at this shit. So you've got failure to breach the outside the box, right? Failure to breach outside the box, and then a retracement, and then you get. Oh, sorry. Wait. You get failure to reach outside the box, right? And then a 50% retracement of the box, right? And then look here, you get failure to get inside the box. Oh wait, no, sorry, this is not what I was trying to point out. It was
something else. But still, this is still quite fascinating. So we failed to get outside, and then we go to the half of it. Failed to get inside, and then we failed to get outside. There was no consequent encroachment on this door. But if you had the original fair value gap on that I was talking about in the start of the video, or when I outlined that when I was talking about it, this here, this zoomed in line, the original gap, got traded to. So to be honest, you've got your confluence right there, and you don't need consequent encroachment on that because maybe this was more important, and then you could have gone from this into the consequent encroachment. So you could have gone from this into there, and then put your stop at break even once you hit this level. Crazy. Some people are actually scalping like that. It's mad. This is just a 1 to 5. But it's showing you how you can utilize these areas, and this is even all of them. Look, we failed to hit it right here, and it's also inside this. So you could have bought this bullish order block and had your rejection, your stop loss invalidation at the at this low here, which coincidentally this exact low this wick low falls perfectly in this box, which is the London kill zone first presented fair value gap on Thursday. So you could have had that as your stop loss, the bottom of this box here, and you could have entered the buy on the bullish order block, factoring in spread, aiming this high. There's a 2 to 1 right now, and you even had you had 2 whole minutes to get in of the bullish order block. You could have even entered it here. You could have even entered it over here, way over here, and then the stop loss is safe if you had this as your invalidation. Because maybe, and look, you could have even, oh sorry, wait 1 second. You could have even entered it way over here and had this, oh sorry, you can't really see it, but this grey box here, I'm putting it right there. So it's your invalidation is this presented fair value gap low, and look, it gave you this entry so many times. Your target could have been this high right here, right? It's overall target. Look, that's a 2 to 1, and you're using any entry above this order block, any entry inside or above this order block with a stop loss here, and you're targeting that high. You've just got literally right now you're getting TP here. That's crazy. And look, it gave you a second time, a third time, and even a wick on the entry. But the entries could be anywhere, you know. But the point is, that's safe with the stop loss I just explained. You could buy there thinking that's safe with the same stop. Buy here thinking that's safe with the same stop. You could have bought here thinking that's safe with the same stop, and you're hitting a 2 to 1 every single time, man. And even more primitive target as the bullish PD area that's already on the chart. And there you go. This is how you can utilize these areas. So you might just look at it and think, oh, price gone into those. Yeah, but look at how it's gone into it and what it's done. Here, we traded above it and we just left it alone. And then we targeted it again after we probably took some kind of high. We took this high, this high, this high into these inefficiencies. This, I'm sorry. And then we targeted it again. We targeted it. And then we used it again. Look, and then we sold here to this. And then we bought this again to this bullish, to this fucking suspension block, sorry. And then you could even sell it to this low here. And then you could buy the sweep of that low. So see how this low gets swept? You can buy the sweep of that. And target the consequent encroachment of the fucking suspension block. And then you could sell the consequent encroachment of the suspension block. into the fucking first presented fair value gap of 9:31 after 9:31 a.m. on Wednesday into any of these targets here. And then what could you have done there? You could have bought that up to this high. Oh, the suspension block again. Maybe we're gonna reject it. Look. We're not actually hitting it. We're not hitting it. But like, do you want me to show you what this would look like? Wait, hold on. So literally, entry could be anywhere inside of this box using the box, targeting that low there. And then, because these lows got taken, you can then put, like, you could have your limit order there, but like you would have to have pre-anticipated it. But when price retaps it again, the same low, so we swept the low and then we retapped it, you can use the order block, bullish order block, as the invalidation. But to be honest, price is likely to go there. But if price goes there, then it's going to come into here. So to be honest, and you would expect like all of this to be taken out. Like if price comes through this bullish order block, you'd expect all of that to be taken out, unless it rejects this green gap. But it, like here, it didn't. So we did take all them lows. But look, you could have scalped this and you could have bought it back into the consequent encroachment, or back into the high. Sorry, the low of the suspension block here, right? And then you could have sold the consequent encroachment of this thing, but you wouldn't have had time to do that. So maybe you could sell here and use that as your stop. And then what can you target? You can target this low down here. But look, you've got these lows, all of this stop losses, these lows. You've got the equity. You've got the equity range, the lower quadrant of the equity range, this, which is that gap to that line to that line, right? And then you've also got the first presented fair value gap of the equity open as your target. Look, so say you just only had that as your target, yeah. Like if you know about look at this algorithmic delivery. It gives you the entries. That's the most incredible thing. The entries are there. It gave me the entries. The entries are there. Look at this move. From here to these lows, to the consequent encroachment of that, to this orange box, to these highs. Fascinating. The algorithm definitely knows and can enter on these. Look, man, this TP was instantaneous. You never had to wait for it. Like, but say that you were targeting like a higher. Look, even if it was that high, man, that high, if that was your TP, you got filled fucking instantly, and it was the most perfect take profit. This is the algorithm. This is how the algorithm works. Like, this is incredible. Look, if I put my TP to the fucking consequent encroachment of that, in fact, no. I want to see this high get taken, and I want to see this high get taken. Is there any other area that could be sufficient for a price to move into? Maybe here, and this is all. This was already outlined as well. This orange box for ages it has been, but this entry does not need to be that big. Look, these highs you get filled instantly. That's more than a 2-to-1. But what's really your what would be your what's it called, stop loss, right? The bottom of this range. Look at these fucking entries. How often did how much did the price go against the stop losses after the trade started running? So the trade started running in profit, and then it was just always continuous profit until it hit the tape, until it hit the tape. But this is all in hindsight. So like I can see this very fucking well now, but like during the moment, yes, it's definitely quite difficult to notice any of this, you know, because you have the emotions of losing money, you have like all of those like thoughts. Some people don't have this analysis. This analysis is fucking amazing. Look, you literally like have failure to breach this level and then consequent encroachment of the gap, this level. Sell off. Where to? Here. Sorry. Here. Why there? Because that is the first presented fair value gap of the equity open. And I've already said the time in the video. I'm going to delete these because this was not my entries, but I want to show you how you can utilize these levels. Wait, I need to delete this, but not that. Maybe have this like this. That is realistic. That's like a realistic trade utilizing this analysis. You can see this low is being taken out. We've failed to get back into this range, and then we start the market like it looks like it's itching to go lower into this low, this low, this low, this low, these lows, these lows, and my overall target is this because this was already on the chart, already on my chart, so that's my target. So this can be a real entry. Look, 3.5 to 1, and that is entering on the shift in market structure here, and as well, there's no. Well, to be honest, just not just this alone, right? You have to be with the overall sentiment. But I'm using the consequent encroachment. Like that's like my actual entry. So my entry is the fact that we didn't breach this here, right? And then the price sold off dramatically and took out sell side, right? Took out sell side this here, and then it utilized that liquidity sweep to trade higher into the consequent encroachment of this, and then price stopped directly there, which is the algorithm winking at me, and then and then we take this low pretty fast. So now at this point I think the market's just going to run lower. But where do I think it's going to run lower to? I'm not just entering a 1-to-1. Like, I mean, that is like even a 1-to-1. The bullish order block, the 1 minute bullish order block, and somehow the stop loss is perfectly on the 1 minute bullish. The TP and the stop loss are on both of levels that are predefined on my chart. So that is an entry that I'll probably take because I'm liking this level here. And it also is overlapping this. And there's overlapping FEGs inside of this area in here, this bullish order block. So that would be my 1-to-1 trade, and I might just only take that for the day. But you can see price offered me a beautiful piece of algorithmic delivery. And what price did next is the most beautiful thing, because my TP is a phenomenal entry for buys. So look at that. So, you know, if I was trading, like say that I'd like put like a 1% for this, right? I could then risk the same exact amount of risk as this 1%. So not 1% of the new balance after this profit, but the 1% balance after, like the same risk, right? Then, because of how price is respecting this level, that's the market winking at us. Like I said before, I might enter at the high of that and then just use the bottom of it as my entry, and then with the same thing, I've just like targeted my initial entry. I've targeted my initial entry because I know that I'm gonna get stopped out here. You know what I mean? Like, if the market's like, look, I'm telling you, right? If I entered shorts here because of whatever, like I told you why, right? And then I see the market trade through this 1 minute premium wick, by the way, which is very important because like this at the beginning of this whole live stream, I was talking about this area here. If you like go to the beginning, you'll see like how this was predefined way back when the market was up there. But like this is all like me, like so I've like proven some trades to you here, but and also the live stream, the 6 hour live stream before like a few of them ago. So, but what I'm showing you here, right, is the fact that like you can use the levels that I have already existing on the chart for targets, specifically this. The stop loss, a bit iffy, but really if that high gets taken, I'm probably going to continue higher anyway. So because I have this level, I pretty much put my stop there. You know, and like I was talking about the importance of this before, and how like the algorithm was respecting my level twice. So I entered short, right? And I targeted another level that I think is going to hold some significance, which is this, and I've already spoken about it. So it's crazy. So basically, I've utilized this twice, and I've targeted my fucking break even. So the market's like giving me profits, right? And because I'm a greedy cunt and because I didn't close the trade, the market's like whipped back very, very, very fast and taken my profits back. But I knew that was going to happen in this scenario, you see, because of this orange box and the respect of this smaller orange box that's inside. So the original gap inside of the first percentage fair value gap of the equities open, which is 9:30 AM Eastern Standard Time to 10:30 AM Eastern Standard Time. So yeah, I'm glad that I've like got that out of the way. So that's what I'm looking at here. Like that's what I can see, and that's how I see people would have already taken that entry. So well, that's how I would like to frame my entries around this box. And then as well, like that entry is a bit of an extended target, but say this green line then instead. To be honest, like look, that's the magnet for price. Price has come down into it here on my entry, and price has gone up into it on my entry. I risked 1% here. I made my 1% back. Right, so now I have an extra 1% of the day, and then that gives me free reign to risk that as much as I want because I still end the day in break even after losing 1%. So now, or like losing the profit of that trade. So now with the profit of that trade, I'll put it on here. You know what I mean? Like, look at this. That's so fucking beautiful, bro. Can you see that? How it stayed in this 30% fair value gap of 931. Like, price does shit like this every fucking day, man, and you can frame so many different types of entries around it. But you can short here, tiny scalps, stop loss, these relative equal highs. Like, there's so many trades amongst this, but like, the biggest trades have happened like within my analysis, which is crazy. Look at this macro. That's exactly where the pivot was. Where does it go? Into the red fucking zone that I have been talking about at the beginning of this live stream. That was predefined when price was way up here. So it's just crazy, really. But anyway, these two entries are fake. They're just an example, right? If I'm actually gonna make some entries today, then I don't really know what I'm gonna go for. To be honest, I don't know what I'm gonna actually choose to use for my entries right now. Like looking at price, I'm not really sure. I feel like the setup will just simply present itself, and as well, I've already made my 3% for today, so I don't need to do anything else actually. I'm very, very happy with just only taking 3% 4 days a week with no losses. The over trading is what's going to cause me losses. I don't want to lose the 3% after I've already made it. So, to be honest, there's been too many times where I've had a nice amount of money and then just lost the entirety of the amount, seeking only such a very small, insignificant profit. I think the word that I use for that is retard. Oh, these inefficiencies here. See this fair value gap in this one. This and this. Fucking hell. Excuse me. So, what am I doing? Oh, there's something else I need to do. Sorry, I don't need to mark any random fair value gap. I already have. Look, my previous analysis, my original analysis, already overlaps this area perfectly. So I don't need to add extra drawings there. What I do need to do is look at this, my beautiful gap. This was my target. This trade ran for a while. TP's down here though. Shit. See where I got the stop? Safe one at this high. But to be honest, yeah, if we take this high and we don't reject it, then we're probably gonna see the high of. We're probably gonna see this middle of the macro, and then we'll see this high get swept out. Might fall below that. So to be honest, I don't need my stop. I didn't need my stop all the way up there. My stop actually could have confidently been the low of this macro, because at that macro I know that we're gonna see here, and then I know that we're gonna sweep this high, and then we're probably gonna go somewhere into this level between these two lines here, and then we're probably gonna sweep that high. So really I could have that high as my stop, and I didn't need it all the way up there. But I could also have it at the low of this macro. This trade held for a while, to be honest. And it also went perfectly into my area. My area was this I was quite stunned to see what it looked like when price, because my box was already drawn and everything. I've only moved it out. Actually, it looked kind of something. I think it was like that or something. Right, so when it actually happened, I watched price I watched price fall straight through it, and then it came back into it and hit the middle of the area, or approximately the middle of the area, and then it left it again, and I was like, what? And then I saw after the fact, I saw that it was just a consolidation above the area and it went straight through it. But so I actually took a small, a very tight trade stop loss. But on my last live stream, yeah, I placed this one because I just could sense it. It was very small, but tight. Look at the size of that mine in comparison to this other trade. But I just knew this was gonna happen. And, as soon as I saw it, I just clicked on here. I just pressed the thing on like that, and I took the entry. And literally just before it fell, I put the stop here, and then I adjusted the TP like that, and the price just dumped straight into it on the live stream. It was quite funny for me. But what's going on right now? We've rejected it. Oh, that's crazy. Right, we've traded to the high of it. No, sorry, we've traded to like the upper portion, but we haven't breached the high. Right, that's kind of like bearish, right? And then we traded to the consequent encroachment of it, of this of this suspension block, and then we didn't take the, and then we didn't go out over the high of it, so we sold off again into this area here, and then it's just miraculous to me how we also used this area to buy into these highs and this high. And these
There we go.
it's crazy, man. Like when you see, when you can like identify what you're looking for, then it does really, honestly, genuinely become so much more easy. Like it's crazy how much easier it is once you start to know what you're looking for. And this is all it is, you know. It looks like a lot, but it's really not. This red lines are the top of a very obvious long wick on the 1 minute chart. It's like that easy, and I've just extended it through time, and this is how prices respected it over time. Failed to get it sold off. It's just like, oh, it's mad, man. It really is quite crazy, but you just need to know what you're looking for, and like maybe I'll chop this video up and like show it to someone. I don't know. But anyways, if I go to what am I doing? I need to draw the rest of the zones. Look, I've only been showing you trades on the premise of the first London, the first presented fair value capital London kills today. Right? I haven't even drawn the rest of the zones. That's only the London kill zone. We also have, let's see, the London kill zone, New York open, and then the macro, and then the Asia starts somewhere. I can't remember where it is. It might be like 5 till 7. Yeah, but I can't remember. I don't think it might not be. So I need to outline a box. I need to draw a box from 9:30 to 10:30 Eastern Standard Time. Oh no, wait, well, yes, but I need to do that afterwards. I need to draw a box from 7 till 9. Right, because precisely 7 till 9 on the 1 minute candlesticks, you draw a box from the opening to the close of that time, and then you mark the high and the low. So to be honest, it's like a square or like a rectangle with high volatility. So to be honest, this is going to be where your highest volatility is, in this area. The equity is open because it's the same opening price as the opening range gap for trading futures. So right here, now there's something that I can see that's definitely something to identify, but it's not within the realm of what I'm teaching here. So basically here I can see that these 3 formation candlesticks, we ran this low here and also this low, so that's like kind of like important, and it's like a market structure shift in some regard, and like it's like a draw on liquidity with also displacement. So to be honest, I can use the actual first presented fair value gap on this chart, because we did that already and then price came and took the high of the move and did that, swept all that out. So we swept all that out here, and then it opens this candlestick, and that candlestick swept all of this out, and then we traded higher above this candlestick. So this is our first presented fair value gap. Look how price, okay, yes, we came into it here, but what you don't understand is that you can have your fucking buy anywhere up here, right? With your stop loss there, and target this high into this fair value gap, maybe even this high if you're bullish. So, but to be honest, that's like that's not even an accurate entry. That's just a sloppy old entry where you think it's gonna go higher, and that's the low for the day. It's not often that, well, to be honest, I guess sometimes it is quite frequent that it will happen. But sometimes the low forms straight away, but like the low of the day of this range forms in the first like few minutes. But that's not always the case. You need to leave like a buffer zone of like an area, because say like we opened and then we traded lower for a little bit and formed a low and trade high. Like, I went into detail about that in one of my last live streams, so I can't just talk about that now. But look, say that you bought the premise of buying that, and then you have your stop loss here for like fucking quite a risky trade. But even a safe trade 1-to-1, you can have somehow you can have your stop loss at the first presented fair value gap of the London kill zone. So that's crazy. Or even the consequent encroachment. Look, the consequent encroachment, somehow whoever's identifying that just gets a perfect clean entry. A very, very, very clean entry. Look at this. It's drawn perfectly with a magnet, by the way. London kills zone first presented fair value gap. This box that I was talking about before, this one here. This can be your stop loss. The middle of that box can be a stop. Look, price came, say that it swept this low, and then it just tapped the top of the box and it didn't go all the way down to the middle of it. That's why my stop's there. If we go past the middle, we probably might come through that into this consequent encroachment of the bullish, for fuck's sake, of the bullish order block. So that's why I would be defining my stops as those levels. And then my TP is here, but look at how clean this 1-to-5 is, and to be honest, it's crazy. I didn't even realize there was like this much of an algorithm. It's fucking mad. It's actually mad. I hope that music's not too loud. Shit, I hope that you've been able to hear me like decently this whole time. That's gonna really piss me off if you haven't been able to hear me this whole time, for fuck's sake. I think that you have, but it's just like there's a like I don't know, I'm looking at this here and trying to like monitor how loud the music is in comparison to my voice. But yeah, so that's why we're using this gap here. So this gap, oh shit, wait, no, sorry, mate, I'm doing the wrong thing. I don't use this gap personally. I don't use this. I just realized, sorry, that's completely wrong. But that premise of what I was talking about there, that's exactly the same. It is actually true for the London kill zone and also for the equities open, which is this range, which I'll talk about in a second. So the first presented fair value gap I use for the London kill zone and also for this, but with the lunch, sorry, this isn't labeled. 1 second. With the New York. But the New York open kill zone for Thursday, which is today. Oh shit. Right. For this range, I would always look for one very specific 1 minute candlestick. And like it's just so incredible that it actually is just one minute candlestick. How many minutes in 24 hours? Oh, sorry, 23 hours. How many minutes? I don't know. So, hello, ChatGPT. How many minutes are there in the 22 hours?
To find out how many minutes are in a year, we start with the number of days in a year.
No, 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 no,
A
no, no,
regular
not a year, man, not a year. ChatGPT, how many minutes are there in 22 hours?
To find the number of minutes in 22 hours, you just multiply 22 by 60 since
There are 1,300 minutes per day. Well, more than this, but like just for training reference. Maybe take factoring time distortion. So 6:30 a.m. in the morning is the candlestick that I focus on. Where is it today? This one right here. Oh, what is going on, man? This high to this low, it can be a huge candle, it can be a small candle. It doesn't matter how big the candle is. It's that candlestick right there.
Exactly. It's all about the behavior.
Not this big one here. It's that candlestick right there. Is my ChatGPT still talking even though the app's closed?
Yep. I'm still here and active even if the app's closed.
Wait, what? How is ChatGPT talking to me even though the app's closed? Did it? I just caught that on live stream. Bro, what the fuck? Wait, what? I'm gonna go back through this later. I can't be asked to do it now, but that's crazy anyway. Right, look at this, yeah. 6:30 a.m. 1 minute candlestick. Rare things do happen. See, ChatGPT was like, see, that's a rare thing to happen, isn't it? Whatever. Look at this fucking 1 minute candlestick. 6:29, 6:28, 6:27, 6:31, 6:32, 6:33, 6:30 a.m. Eastern Standard Time, which I'm pretty sure is 11:30 in England. 11:30 in the afternoon. Look at this. The high, and I swear this happens to me all the time. I just see it afterwards and I'm like, for fuck's sake! Because I see it afterwards and it's so blatantly fucking stupidly obvious. And because I know what I'm looking for, I'm able to just find this entry here as well. Look at that. Sell for the whole day. Simply on the premise of it coming into this 1 minute candlestick. Like, I don't know why it does it. I don't know why, but it just does. This isn't staged. I didn't plan to draw. Well, no, I did plan to draw this on right now, but look, you don't believe me, yeah? What do you say about this one then? This is the 6:30 a.m. candlestick. We have candles somehow magically above it right here. Candles staying magically inside of it. And this wick. This wick doesn't breach the top and comes straight through the bottom. And then this wick doesn't breach the bottom and look what price quote. Like this, you can see this area. This is the key here. I found it. Well, it wasn't me that found it, but I don't know, the way that it was taught to me, it was interpreted, like it was how I interpreted it. I don't think he specifically said go and do exactly what I just outlined. Like look at it, the exact 30 sorry, what? The exact 6:30 a.m. candlestick on the 1 minute time frame. He didn't tell me to outline that specific 1 minute candle and drag it forward. He never showed that to me. He said, look at what happened at 6:30. And so I did this one time where I was like, well, what happened at 6:30? That's the 6:30 candlestick. I just dragged it forward, and I must have seen something. Like for me to have always now, ever since the first ever time that I like put this on my chart, this like narrative here, I I just must have seen it the first ever time that I put it on, because that like I've just always known to put it on now, and like instead of, and look at what it's giving to me. Look at what it's actually fucking giving to it. Look, body staying inside of it here. That's confirming already the algorithmic delivery. It doesn't need to be an entry straight away because I know things are bubbling up. I extend this line for 1 week at least. Like for at least 1 week. Do you want to see what my fucking chart looks like? That's a forced laugh, but look at this. Look at that, man. I have analysis all over here as well, but it's on a different chart. This is like, this was a clean chart only for doing the premise of what I've been like doing here. But it's mad though. Mad. Where do you think we're going now? I think we're gonna have some kind of like wicks that are blatantly obvious on exact perfect lines in this area somewhere. Or like something obvious about this. I don't know. Do you think we'll come all the way back down into here? I'm not really sure, to be honest. I'm really zoomed in onto the chart right now. I'm not looking at overall narrative. I know what the overall narrative is, but like what's underneath this, all of that there, I don't know about that, to be honest, mate. Like the way Bitcoin's acting right now, like we might not see all of this taken off straight away. Like we could literally consolidate exactly the same as this right where we're at right now, in amongst this area for ages. Like there's nothing to stop that from happening. Look at how high we've come in the last few days. Like all of this, like proper like stretched price. Oh shit. So like because of that, it might not want to come all the way back down into here straight away. It might just consolidate above all of this for a long time, for a while. Who's to look exactly like this time distortion? It's crazy. So you could also call that like a transfer of weak hands into strong hands of the asset, which is Bitcoin. Loads of people are selling it thinking it's going to continue to go down, or they've like been stopped out already, and then they already have been forced to sell it. Like I don't know. So as the price is falling, people don't want to like keep it, so then they sell it, and then like people also buy it when it is at cheap price. Or what's considered to be cheap price. I thought, I personally thought we were gonna smash smash 80k, but the price stayed above it and it didn't actually ever trade into it, which I was really quite pissed off about, to be honest. Like I genuinely thought that, but maybe that was just my liquidity provider though, because no, I'm pretty sure no price did stay above 80k. Like no, it didn't hit it for anyone. Unless maybe the futures price, I'm sure there's one liquidity provider that's marginally different on theirs, then maybe it did hit it, but I'm not really sure. But look at this here, man. Is this the 630? Yeah. Look at what that sell gave me. The 630 into this, just only that. Maybe just a 1 to 5. And look, I've hit a few 1 to 5s today, utilizing these prices, remember? Like, I've just drew them on the chart in this video earlier, so. you can see that like I was like targeting this area from the shift in liquidity here. And as well, look now after the fact, and once this 630 is drawn on, it gives so much more clarity into what I was talking about before. Because look here. So that was the shift, the market structure shift that I was pointing out, and I put an entry on the premise of this, and I have my stop loss above that PD area, right? So pretty much when we swept out this that I mentioned, I shorted into this, and like just as an example, it wasn't like a real trade. I just placed it after to show the premise of the shorting anywhere up here as this is the target. And so, and then and then you could also utilize this twice, which is what I also mentioned, to buy from again into like my break even that I said. Like, so obviously if I placed it like somewhere around here, and then I targeted like anywhere here, and then my break even's there, right? So what I did on the video before is that I utilized the same orange line again, and then I put the TP at the break even, and then my stop was below here, or like no, below the range. Sorry, below the here. My stop was there, and then I got two trades out of the same one. But now you can see that like now I've put these zones on the chart, which specifically you can see is 7. Like I've already mentioned what all of them are in this video. I don't know how long this video is, probably like a few hours, but this is the fucking secret sauce. I'm telling you, if you use these concepts, like the relative equal highs and looking for the certain liquidity, like this low, for example. But like that low could be quite strong, but it's because this is beneath it, and like, you know. If this low is inside of here, like this one is, then that would be like then like maybe the price wouldn't have needed to come back into this. So like now it's done it one time, it may never come back into here. But like that just depends on the overall narrative, because we're like, look at where we are right now. We're obviously gonna have some retracement into this daily fair value gap here, this black box. See this, yeah. It's huge. Surely there's gonna be a tap into it. I think it might still be open. Fair value gaps don't expire, by the way. Their characteristics can be changed later down the line. I'm gonna stop this live stream in a second anyway. Or maybe wait, how long is it? I might leave it on while I go out quickly and then come back. How long is it already? It's 2 hours. Right now I'm gonna turn it off because obviously it's 2 hours already. It's quite a significant amount of time. So but like notice what I've been showing you here. Like yeah, I haven't taken any like actual trades, but to be honest, if you wait and like know what you're looking for in these setups, it's very simple to navigate your way around. From this rejection, it even gave you this. So like an initial rejection, a little small scalp of like a small 1-to-1 trade percentage, it gave you this. So even though it was actually coming down to here, it's just that the algorithm respected this level enough to respect you for having that on your chart. Like it's not like it came to this area went up one candle and the next candle spiked down. It's like it gave it in a nice clean engineered way. Look at this high not reaching the top of what's that, sorry? The London Killzone gap that I was talking about. Anyway, there's one more gap to put on the chart before I go. This low got taken out, market structure shift. There's no fair value gap until here, and this fair value gap is beneath the shift. So, hello, shit. Hello, can you still hear me? I'm pretty sure you can still hear me. Hello? Fuck's sake, man, this is so irritating. Why did this happen? Hello, I need to know that you can still hear me. There's something else that I need to point out. For fuck's sake, man. It's so annoying. Why is it doing this? This isn't the right thing. What am I looking for? I need to get my live stream up so I can see what the quality is like. I should have done this way earlier, man, for fuck's sake. I hope that you've been able to hear me these last 2 hours and that this hasn't all just been wasted. So annoying. I need to go on the live, click on my live stream. And then I need to pause this music that's on playing on here. Hello, I know you can still hear me. Shit, sorry, I'm messing up. This is like oh fuck's sake, man. There's something else that I need to point out. This is so irritating, but I'm messing everything up for some reason. I need to reconnect my headphones so that you can hear me properly because I don't know why it disconnected. It's so annoying. 1 second. I think it's gonna connect straight away, and then I should be able to hear myself, and we're good to go. Right, it says connected.
Hello, can you hear me better now? Is that better? Yeah, I think that's actually better, right? Okay. So just for the last part of the video, right? I hope that you've been able to, yeah, you have been able to hear everything that's said before, right? These are very good teachings, and I am so grateful myself that I found this through ICT. Like he taught it to me over the videos in a way that was very educational, very in depth. Like he put so much more, like the way that he presents his own concept is so much more intellectual. Like it's his own work. So the way that he does it is fucking phenomenal. And because like he understands exactly what he's pointing out, and like basically like I've created my own thing within inside his teaching. No, I haven't. He told me to utilize all of this, yeah. Um, but I've kept it very, very simple, and like this is the strategy that I use because now I'm comfortable with it. I've been using this strategy for a few months now, so I understand like a little bit more in depth about like what I'm looking for and how price will react in the levels. Like see how we have like algorithmic delivery here and here based on this level, right? But here, like we just have like accumulation inside of it, and then once it's finished, then we have algorithmic delivery, like as a wrapping wrap. Okay, wrap this up now, and then we blast through this, and then we have algorithmic delivery back into what's this? Sorry, this is the first presented fair value gap of sorry, after 9:31 a.m. Okay, I like it, Picasso. And this is on Thursday. So like I've said, I extend these levels for like at least a week. Like you see how price gave me something here. It's just like the body stayed below and the wicks like went into it. Like it just let's see that. And then from straight into here. From there. And then that's how it went high. Like that. Like look at this move here. Oh, sorry. So these highs staying below this green box. And then how it acts with this lower green box, and also here, and also here. It does things like this for like weeks, like a week. You know what I'm saying? Like even though price is moving far away from it now, like look, this is yesterday's price. So the orange boxes are yesterday's price, and the green boxes are today's price. So you can immediately see how extending, knowing what that is and extending it on your chart is a very, very valuable thing to have had in this circumstance. Look at it. Where is the price falling to after it leaves the green suspension block, the turquoise suspension block? Where is it going to fall to? Where is it falling to? Where's it going? You know what I mean? Everyone's like selling it. They're selling it, selling it, selling it. Where's their TPs? Where are their TPs? I want to know where the majority of people put their take profits on this, on the premise of the market falling here and people are entering. Where are they putting their TPs and where are their stop losses in an active move? So their stop losses, yeah, probably is going to be in this area or like maybe like in this box. Yeah, or maybe they're just jumping on it and not thinking about a stop loss, you know. But but it's crazy, man, because if that's your TP here, that's nuts. Even from way up there. From all like look, it's kind of like price just already knew it was gonna come down to here. Because after it was formed, right? Look, trade way above it, yeah. We stay above the halfway point of this entire range here, and then we trade high and take out this high. That's a rejection block. So anything higher than that is a rejection block. So like say like in the future that you would mark. So you could mark the high of this candle to the high of that one. Rejection block. This area is likely to be utilized in the future. And it's also likely to stay open for a while. Because if it actually formed a rejection block and then price just like either slightly trades into it or rejects the rejection block, that's that's giving you all of this movement in that case, including this low getting swept out. But where do you actually think it's gonna go? My eye is on the first presented fair value gap of Wednesday here, right here. I think it's gonna look at what I'm trying to get across with here. Okay, this is on the 1 minute chart. Imagine this is all that's been printed on your chart so far. This is what you're looking at. That looks like an easy objective if you know what it is. But it took a long time for price to actually get to it. and you had to hold through drawdowns. A few like, oh wait, did you? I don't know. It's just like long. It's just long, as in it's taking a long amount of time to do that. But it's like, I don't know. But look at this level here and how it just stayed open. Like there's no wick at all into that. Like nothing came back into this level. So if you knew what that macro was there, and if you can see how price is acting inside of this macro, and I also on my previous live stream mentioned something about the discrepancy between the algorithmic delivery on different liquidity providers chart. So why is it saying plug it in, man? I've already plugged it in. Oh, I better not die. Fuck's sake, man. What is going on? Is it charging or not? Is it not? It's not charging. Fuck no. Oh, there we go. Damn, that was close. That. Oh, it's fine. Wait, what? It's not charging anymore. Why? Oh, fuck's sake, man. Are you taking the piss? Yeah, I might have to like wrap this live stream up right now, because it's, for some reason the laptop's not charging. Oh, come on, man. Come on, come on, come on. Please, please, please. Why is it not charging? It's orange light. Why is it not charging? Oh, fuck's sake. Right. I'm gonna have to like wrap this live stream up now, unfortunately. But I'll sort of like catch on to this in the next live stream though, and like I'll give more detail and stuff. The laptop's on 5%, so I really need to go. Right, I'm gonna end it here. Fuck, I need to go on YouTube live streaming. 2 hours and 6 minutes. Oh, fuck's sake. Right, okay, I'll see you later anyway. Oh, look, it's worth saving it on. Fuck, we're coming back into this zone here. Oh, I really want to leave it on. Fuck, this is so annoying. Oh no, I'm gonna have to go.